Welcome back, everybody, to another deep dive.
Yeah.
Today, we are going to be talking about something I think a lot of people think they understand. But when
Yeah.
you really kind of get into it, it's a lot more nuanced and interesting and impactful than maybe they realize.
Absolutely.
And that is diversified investments. And we are going to be looking at some insights from Rob Tetrault from Canaccord Genuity Wealth Management.
Okay.
And he's got some really interesting points, and we're going to be looking at a few of his videos and really kind of breaking this down.
Yeah, sounds good.
So, I think it's one of those things where you hear diversified investments. You're like, oh, yeah, I've got a bunch of different things,
Right.
in my portfolio.
Yeah, you think you're diversified just because you have like 20 different things.
Right, exactly. But it's
Well,
not about...
It's not about the quantity.
Right.
It's about the relationships between the investments.
Yeah.
Like, how do they move in relation to each other?
Sure.
I always use the analogy like stocks and bonds used to be
All right.
like a seesaw, right? So if one went up, the other one would go down.
Yeah.
But what's happened now is they kind of move together a lot of the time.
Right.
So that inverse correlation isn't as strong as it was before. So it's not that automatic rebalancing
Interesting.
that it used to be.
Okay, so that's an important shift then, because we've always been told stocks and bonds, you need this balance of stocks and bonds, but if they're both kind of moving in the same direction,
Yeah.
then that balance is out of whack.
That's right. And it challenges the traditional like 60-40 portfolio
Oh, yeah.
or 70-30 portfolio approach.
Okay, interesting. So, I think something that he brought up that I think is very applicable to, the average Canadian, a lot of people are, heavily invested in Canadian equities, right?
Yeah.
And he seemed to suggest that could be a problem. Why is that?
Well, so Canada as an economy is very heavily reliant on certain sectors,
Yeah.
like financials and oil and gas.
Right.
So if those sectors were to struggle,
Hmm.
your portfolio would also struggle because so much of it is
Yeah.
tied to those sectors.
All in the same basket.
It's all in the same basket. Yeah.
Yeah. So that makes sense. So that's where that diversification
Geographically.
is so important.
Yeah.
So, yeah, I mean, we're talking about, going outside of Canada, so obviously we've got, the U.S.,
Yeah.
global European, Asian, Australian equities, but how do we know where to go?
Right. Well, that's where you start to understand like global trends
Right.
and macroeconomic factors.
Okay.
And, really you're getting into an area where a lot of people would seek advice on this.
Yeah. Yeah.
But not only that,
Yeah.
then you can diversify within a specific country.
Oh, okay.
So you've chosen to invest in the U.S. Right?
Okay.
Well, instead of banking on just one industry, like let's say technology, you can diversify within the U.S. and choose different sectors like healthcare or consumer goods or industrials.
So it's not just picking a country, but getting granular
Exactly.
within the country.
Yeah.
Interesting. So we've been talking a lot about stocks. What about bonds? Are they subject to the same kind of need for diversification?
Absolutely. So a lot of people just think bonds are bonds.
Right.
But that's a misconception.
Great.
So you've got like your traditional like government and corporate bonds.
Yeah.
But you can branch out into mortgages,
Mm-hmm.
private debt, income notes.
Okay, so hold on. Let's rewind a little bit.
Yeah.
Income notes.
Yeah.
What are income notes?
So they're kind of like debt securities that pay either a fixed
Oh, okay.
or variable interest rate.
Right.
So it just gives you a different way to diversify
Mm-hmm.
your fixed income exposure.
Instead of just sticking with traditional bonds.
Mhm.
Okay, so even within bonds, there are so many different levels
Yeah.
of diversification.
That's right.
I'm starting to feel like my portfolio needs like a complete overhaul.
I think everyone's does.
But I think this is where things get really interesting.
Yeah.
We're going to get into alternative assets,
Yeah.
which is like a whole other landscape of investment.
Yeah, it's like outside of the stock market.
Okay.
So we're talking about things like private real estate,
Mm-hmm.
private equity,
Yeah.
private debt.
Okay, so I'm already fascinated just by those words.
Yeah.
But how do those work in a portfolio? Like, how do I, as like a regular person, how does that play into like what I'm doing with my investments?
So because they don't trade on the stock market, they're not subject to those daily swings
Oh, okay.
you see in the news,
Mm-hmm.
right? So you've got the potential for lower volatility.
Right.
You could potentially have positive returns even when the stock market is struggling.
Interesting.
Yeah.
So that lack of correlation is,
Yeah.
is a huge selling point for that type of investment. Okay, so I have to ask, when I think private equity, I think of like super wealthy people.
Yeah.
Like, hundreds of millions of dollars to throw around.
Right.
Is that accurate, or is it...
So historically, that has been true,
Yeah.
but it is starting to change.
Okay.
So there are now platforms and funds that are designed for individuals
Mm-hmm.
that have
Yeah.
smaller amounts of capital.
Interesting.
So the barriers to entry are
coming down.
coming down.
Eh.
That's great to hear.
Yeah.
Because that sounds like something that could really be valuable for so many people.
For sure.
But wow, this is a lot to think about.
Yeah.
Making my head spin a little.
Yeah.
What should somebody do if they're feeling like, oh my gosh, this is a lot of information?
I think a lot of people are intimidated by this, so I always recommend, like, you need to seek expert guidance.
Okay, so we're talking like a financial advisor.
Yeah, for sure.
Okay.
Yeah, someone who can really tailor, like, a diversification strategy for you based on your goals, your risk tolerance, your time horizon.
They can really be invaluable because it's a complex landscape to navigate.
So a good advisor is basically like your guide.
Yeah, for sure.
To walking you through this.
Absolutely.
Okay.
Yeah.
I like that. Well, this has been a great start to this conversation.
Yeah.
There's a lot more to unpack here.
Absolutely. We're just scratching the surface.
So I think in the next part of our deep dive, we're going to really kind of get into these alternative assets.
Yeah, that sounds good.
And start, breaking those down
Yeah, let's do it.
a little bit more.
Awesome.
All right, so we're back and we are diving deeper into this fascinating world of alternative assets.
Yeah.
We touched on it in the first part of our deep dive here. But we talked about private real estate,
Mm-hmm.
private equity, private debt.
Yeah.
These are things that, most average investors don't really deal with.
Right.
So let's start with private real estate.
Oh.
What is it about private real estate that makes it so alternative?
Well, it's a tangible asset, Mole.
Okay.
So you're actually investing in physical property.
So it's not just like owning a rental property.
No, it's more than that.
Oh, okay.
It could be like a piece of a downtown office tower or a shopping mall or industrial warehouses.
So I could like own part of a skyscraper.
Yeah, potentially.
That's pretty cool.
Yeah.
So what are the advantages of going that route?
Well, for one thing, you could have a steady stream of income through rental payments,
Okay.
and it's an uncorrelated asset,
Right.
so it doesn't move directly with the stock market.
So even if the stock market's, struggling, my real estate investments could be doing okay.
Exactly.
That's nice.
Yeah.
But how do you even get involved in private real estate? Like, do I need to like put on a hard hat and start like looking at blueprints?
No, you don't have to be a developer.
Okay.
You can invest in things like REITs.
Okay. So REITs, I've heard of them, but I don't fully understand.
Yeah, what they are. So REITs are real estate investment trusts,
Okay.
and they essentially own, operate, or finance income-producing real estate.
Okay.
So you're buying shares of a REIT,
Right.
which allows you to invest in a diversified pool of properties.
Without having to deal with the hassle of actually owning them?
Exactly.
So it's like instead of buying a building,
Yeah.
I buy part of a company that owns a bunch of buildings.
Yeah, exactly.
Okay.
And that spreads the risk.
Exactly. And they also distribute a large portion of their income to
Yeah.
shareholders as dividends.
So there's potential for passive income there.
Yeah,
Interesting. Okay, so REITs are like the gateway
Yeah.
to private real estate.
for sure.
Okay, cool.
Okay.
All right, let's move on to private equity.
Okay.
Because that sounds very exclusive and mysterious.
Yeah, it kind of has a mystique about it.
It does.
But essentially, it's investing in companies that are not publicly traded on the stock market.
Okay, so they haven't gone through an IPO.
Exactly.
Okay.
They might be in like a growth phase or undergoing a transformation, or maybe they just prefer to stay private.
Okay.
But private equity investors provide capital.
To these companies to help them grow and increase in value.
So it's like getting in on the ground floor of
Yeah.
a company.
Exactly.
That's pretty cool. But again, this sounds very, big leagues.
Yeah.
Like, how do I, as a, regular person,
Right.
get involved in that?
Well, historically, it has been for high net worth individuals and institutions.
Yeah.
But there are platforms and funds that allow individual investors to participate
Really?
with smaller amounts of capital.
Wow. So the barriers are coming down there too.
Yeah, they are.
That's amazing. So we've talked about real estate private equity.
Yeah.
What about private debt?
So private debt is essentially lending money to companies that might not borrow from traditional banks.
So like an alternative lending market.
Exactly.
Okay.
And investors essentially become the lenders through private debt funds.
Okay, so it's kind of like buying a bond,
Yeah.
But instead of lending to like the government,
Yeah.
I'm lending to a company.
Exactly.
Okay. And does it have that same kind of benefit of being uncorrelated
It does.
with the market?
Yeah.
Interesting. Okay, so private debt, real estate, private equity.
Yeah.
I mean, these all sound very appealing,
Yeah.
but I'm also getting the sense that it would be very easy to make a mistake.
Yeah. It's not something to jump into lightly.
Yeah.
You really have to do your due diligence,
Mm-hmm.
and having a trusted financial advisor
Yeah.
can really help with that.
So it sounds like a financial advisor is basically like a Sherpa guiding you through
Yeah, like a guide,
this mountain of alternative assets.
for sure.
Okay, cool. Well, I think we've laid some really good groundwork here.
Yeah.
And kind of demystified this a little bit, but I think we can go even further with
Yeah.
this conversation. So in the next part of our deep dive,
Yeah.
we're going to kind of bring this all together
Perfectly.
and talk about, what this all means and how it ties into, our overall financial well-being.
Yeah. I think that's
I
important.
think so too.
Okay, cool.
So we've talked about, all these different, categories of investments and, different ways to diversify.
Right.
But I feel like sometimes we get so caught up in the technical aspects of it
Yeah.
that we forget why we're doing it
Yeah.
in the first place. It's not just about numbers
Absolutely.
on a spreadsheet.
Yeah, it has to be about your life and,
Yeah.
your values and your aspirations.
It's very personal.
It is. It is.
Yeah, and I think, when we talk about, diversified portfolio,
Yeah.
you could have somebody in their, early 20s who's just starting out,
Right.
and their portfolio is going to look completely different than somebody who's, 5 years away from retirement.
Yeah, for sure.
Right.
Yeah, their goals are different. Their risk tolerance
Totally.
is different. Their time horizon's different.
Yeah, and even within, those broad categories, everybody's
Different. Everyone's unique.
Yeah.
Yeah.
So there's no one size fits all.
Yeah. It's like a tailored suit.
I love that.
Not off the rack.
Yeah. Yeah. And that's where I think, having a financial advisor is so crucial.
Yep.
Because they can really help you kind of, understand all of these moving pieces.
Yeah, and articulate your goals.
Yeah.
A lot of people don't even really know what their goals are
That's true.
until they sit down and they talk to someone and they figure out, okay, what's important to you?
Right.
What are you trying to achieve? And then how do we get you there?
It's almost like a financial coach.
It is. It's like a coach or a guide.
Yeah.
Absolutely.
I like that.
Yeah.
Okay, so if there's somebody listening right now who's, maybe they're just starting out and they're feeling totally overwhelmed by all of this, or maybe they've been, doing their own thing for a while, but they're realizing that they need some help.
Yeah.
What would you say to them?
I would just say, don't be afraid to ask for help.
Mm-hmm.
Find an advisor that you trust, that you can talk to, and that understands your needs and your goals, and
You will really listen.
will listen to you.
Yeah, and work with you.
Yeah.
Yeah. Okay, cool. Well, it's interesting because diversification, it's not a one-time thing.
No, it's a journey.
It's an ongoing process.
It is.
Right?
Yeah.
And, as your life changes, as, your goals change, your portfolio needs to adapt.
Absolutely. It has to be dynamic.
Yeah. So it's about regularly checking in with yourself
Yeah,
and making those adjustments.
for sure.
Well, this has been a fantastic conversation.
Thanks.
We've, learned so much about diversification. And I think, the key takeaway for me is that, it's not just a financial strategy.
Yeah,
It's really a pathway to, more financial freedom
absolutely.
and peace of mind.
Yeah, it's about taking control of your future
Yeah.
and making informed decisions.
I love that.
Yeah.
Well, that about wraps up our deep dive on diversified investments. This has been, incredibly insightful, and I'm really glad that we got to have this conversation.
Me too.
So to all of you out there,
Yeah.
happy investing.
Take care.